Yo, what's going on, guys? Welcome back to the channel. In today's video, I'm going to go over the trades that we took on Friday, as well as the game plan going into this week, and what I'm going to be looking for trades going into tomorrow. So this is what we look like. Obviously, on Friday, we all know the market has been getting absolutely destroyed, and just this chart alone right here just tells you the trend in the market. It doesn't matter. I know we dropped a ton of points, but what's oversold could stay oversold. What's overbought could stay overbought. So we just play with the trend. And when you just look on this chart here, 30-minute time frame, you guys know this tells us. Oh my God, I keep messing up this chart, but this chart tells us the trend in the market. So on Fridays we got new contracts. As you guys know, Fridays we pick new Friday contracts because the current ones would be 0 DTE. So we go pick the next week's out on Friday, and then on Monday we repick them. So that's why we had the 520 puts in this scenario. But you can see the 10's above the 50, 50's curling up. That means the market's bearish, focuses on the short side. So now when we dip lower into the 0-day chart, this is what we looked like right off of open. You can see what happened. I mean, with this chart alone, there is no reason to be tossing longs on the table. And this is why the system's great. It keeps you on the right side of the market, and not to be longing because we are, crossing the puts. I mean, you can see the 50 broke, I think, like once down in here, but obviously we got right back above it and continued lower. So, this chart keeps us on the right side of the market. If you were to trade, definitely, if you were trading, I would be sizing down because of the volatility. I mean, like 5-minute candles could be like 70 to 80 points at times. So, sizing down when we're very, very volatile is the way to go. And then just shoot for, catching 100 points really isn't that hard in this type of market because we're moving so, the candles are a lot larger in point size. And yeah, this is what you could have taken though on Friday if you did trade. You could have bought this 10 dip right down in here because we got this cross right off of open, and it looks very clean of how this cross played out. But if you guys watched the video from yesterday, I think I went over it a little bit, but this is what we looked like. I'm gonna pull up the chart, but the chart right off of open was so extended from the SMAs, and I'll show you what I mean by that. But the price, where price was versus where the SMAs were, there was just a very large gap, and that's not a trade that you want to be taking because the risk is just way too high, especially given the market we're in. We're moving a lot quicker. But this is what we looked like right off of open. I went over this yesterday, but I'll go over it again. This is what we looked like. You could see where we're at, 9:40, 10 minutes into the market. This is just not a cross you want to take. Why? Because if this candle ended up wicking down, look how far we got to go to the 10 and the 50. 10 and the 50 are at 0.8 and like 0.45 maybe, or 0.4. And given that, I mean, this could pull back a ton before it actually rips. So in that case, you just wait for the pullback to the 10. If we don't get it, you don't get it. Obviously, this trended up a little bit higher before, pulling back. But, you just wait for that entry. We got this nice pullback to the 10. And this is a trade you could have taken because this is like the initial... This is the first pullback that we got from it. And, there was no entry given. So if you were trading, this could be a trade you could take. Obviously, I like to scale into these trades and then average up as it goes in my favor. So on this red candle right here to the 10, I would have added my initial position, and then as the trade was going in my favor, add a little bit more. So we got this nice wick, and then it pulled back a little bit more, and then on this green candle you could see we got a lot closer to the 10, and this is where I would add more to my position because we're starting to get that bounce. The 10's really close to where price is. That's a good spot to average up, and then you catch the move, just trail the 10 SMA, and you can see the move that we got. It's a very simple way of trading. 2 lines crossing, using the 10 as your trailing stop, and this is the good thing about like trend in the market. I went over this in yesterday's video, but the good thing about the system is it lets you know when to enter and when to sell, and you could and when to buy again, pretty much. So this 10 SMA dip, I keep messing up the charts, but the 10 SMA dip gives you the entry right here, and then when to sell when the 10 SMA breaks if you're still holding. But I mean, by the time we're already up this many points, you'd already be out. But just for instance, we close below the 10, you exit your runners that you're in, and then you rebuy at the 50. Obviously we didn't tap the 50 exactly, but if you wanted to start scaling in, you could have, or you just wait for the reclaim. I mean, we got back above the 10. And then the 10 SMA was still down quite a bit. It looked it was down hard. So at that point, just wait for the 10 to curl up a little bit more, and that happened right on this pullback. And this is where your low risk entry could have came into play. Buy at the 10, and obviously we had these very weird candles right here around lunchtime, and then it obviously continued lower. So you could have tried that 10 dip. It did close back below, so you could have sold if you want, or just use the 50 as your stop. There was a bit of a gap there, so probably that wouldn't have been the case. But yeah, we ended up just trending lower. Once we got back up with a 10 again, maybe you try it again. But when we're in a market like Friday, okay, I wouldn't stick around with the market that long. Like, all you needed was this 10 SMA dip right there, and you would have been good. And then we got somewhat close to the 50 there, so if you bought that dip, you would have been paid again. And then we came down to the 50 right here. It closed below it, you would have been stopped out. But once we got back above, honestly, you could have re-entered that. Once we get back with a 50, you're okay to buy that dip again, and you would have been paid big time. The risk to reward on these trades are just so big, in terms of what you're risking versus what you're going to be gaining. Like on this trade, I mean, if you buy the 50, it closed below, you're out for a small loss. You get back in and look at the runner you get on that. So that's how you would have played Friday. And obviously on this right side of the chart, I wouldn't even be playing anything. It's already so late in the day. There's no point of trading this chart. But the only thing I took was this 10 SMA dip, and then you could have bought that 50 dip if you wanted to. But other than that, really wouldn't have tossed any more trades on the table given the market we're in, because we could get a face ripper at any time and just make your money, get out. This is all you really need, because this gave you a ton of points, easily over 100 points at NQ. That probably gave like 300 if I had to guess. I don't really remember what the chart looked like or how many points it gave, but definitely over 100 points easily, and that would have been your day right there. So again, it's very simple. Just trade with the trend. The 0-day chart told you all you needed to know. There was no reason to be really tossing longs on the table, given that the 0-day puts were crossed and the 30-minute was crossed on the Friday contracts on puts. So that's how you play Friday going into this week. Again, what do we look like? I don't know what contracts we're going to get because we dropped so much. We're probably going to get different ones, but again, same things apply. 10s above the 50 on the puts, we're bearish, but wouldn't be surprised with a hefty bounce at any point this week because of how oversold we were. We dropped I don't even know, 2,000 points in 2 days. So the good thing about this is that there's going to be a large gap between where price is in the 50 SMA. So if we do get a call cross in between this 10 and the 50, I'm going to take it. That's a trade you could take because of how much room there is to drop, or rip in this case, or on the premium to drop to the 50. So if we do get that 0-day cross on calls and we're far from this 50, I'm going to take that trade. And again, if we get a put cross, that's your trade you want to take. 50 dip on puts, that's a trade you want to take. So we got a game plan for both sides. That's a good thing. We can catch the upside and we can catch the downside. It's just a matter of what what trade gets given to us, and we'll go from there. But it's a very simple plan going into this week. If there's a hard bounce, we're going to catch it. If there's more downside, we're going to catch it. I mean, it doesn't really get easier than that. So, it's a simple game plan. If you guys enjoyed, drop a sub. If you guys want to learn, follow along with the trades, Discord down below. But, yeah, that's all I got. I'm out. Peace.